The stock market has soared since the start of 2019, this despite President Trump shutting down much of the US government for 5 weeks, accompanied by increasing global economic doom and gloom, from a slowdown in China to Germany teetering on the brink of a recession, with Italy already having tipped into recession. And if that were not bad enough, then we have the train wreck that is Brexit. Not the decision to leave the European Union, but rather the failure of the UK government and Parliament to implement Brexit in a competent manner. Far from it. Parliament has been paralysed, with the UK government look set to beg the EU for an extension to Article 50. Nevertheless, the major stock indices such as the Dow and FTSE have soared, confounding not just the usual doom merchants out there, but much of the mainstream press, because most of that which the press peddles has been bad news. This is my first video in a series that concludes in a detailed trend forecast for the Dow Stocks Index, covering the period from March 2019 to September 2019. However, the whole of this analysis has first been made to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. So why has the stock market soared? What is it the stock market knows that most commentators and economists fail to comprehend? Well, for one thing, there are the dovish signals out of the Fed, which go beyond a pause in their interest rates hiking cycle in response to a subdued inflation outlook. Similarly, the world's other major central banks have had their own reasons to avoid rate hikes, most notable of which is the Bank of England, that has been busy propagandizing the prospects of a no-deal Brexit Armageddon in attempts to scare Westminster into avoiding exiting the European Union in anything other than an ultra-soft Brexit. So on face value, the stock market is clearly discounting not just a more accommodative interest rate environment, but that QE really is forever. Once it starts, it does not stop, as evidenced by the Fed's balance sheet first having exploded from about $800 billion to over $4.5 trillion, all to bail out the banking crime syndicate by inflating asset prices such as housing and stocks, so as to generate artificial profits for the central bankers' banking brethren. But none of this is news, for I've written of it for a good 10 years now that QE will never stop, as the world's central banks will repeatedly expand QE to monetize government debt. So fast forward to the present, and the likes of the Fed have already halted unwinding of QE after barely reducing the balance sheet by 10% from $4.5 trillion to just $4 trillion. What does this mean? Well, it means that if the Fed starts to even smell a recession or a financial sector distress, then it's going to start printing money again that would soon take QE to well beyond the previous $4.5 trillion peak, perhaps doubling its balance sheet during every future financial crisis or recession, given how successful QE was in averting financial Armageddon during the 2008 financial crisis, all without sparking general price inflation. So I would not be surprised that when the next financial crisis or recession materializes, QE will resume, by the end of which the Fed balance sheet will likely have doubled to at least $8 trillion. And this is which the stock market is discounting, just as has been the case for the duration of this QE-driven stocks bull market that clearly paused during 2018 in the wake of the mild Fed unwinding of its balance sheet. So forget any lingering Fed propaganda for the continuing unwinding of its balance sheet, the actual rate of which has slowed to a trickle, and thus we are probably near the point when the Fed ceases unwinding its balance sheet, because, as I've often voiced, that once QE starts, it does not stop. And once more, the whole of this analysis has first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And do remember to subscribe to this YouTube channel for new videos in this series as I count down to my stock market trend forecast conclusion.